Good day, EasyEquities community, and welcome to the webinar with the team from WeBuyCars. It's always great to welcome the Easy community, and it's even more special to do so on a day when a fantastic brand and exciting business like WeBuyCars releases their results. For those of you I haven't met yet, my name is Carel, and I'm joined today by Faan, who's the CEO and co-founder at WeBuyCars, Chris Rain, the CFO, Willem, who's the Chief Strategy Officer, and also Wynand, who's in charge of the people business. So we're joined by a fantastic group of individuals. They released their results this morning, as I've said. They've been doing some major presentations already. So Faan, thank you very much for you and the team for joining the EasyEquities investors and coming to chat to us. We really appreciate it.
Thank you, Carel, and the Easy Equity tribe. It's nice chatting to you guys.
Yeah, there are about 37,000 of us who are proudly WeBuyCars shareholders. In fact, to be exact, there are 36,791 of us currently, and I'm sure that's going to grow. Our average age is 34. The smallest holding is 20 cents, and the largest is 2.4 million, and everything else in between. And we're proud of all of those investors. And it's great to see a CEO and his team engaging with these retail investors. But let's jump right into it because I know you guys are busy. Firstly, congratulations. Delivering on such tremendous growth and record sales in a tough environment is no small feat. But beyond the numbers, you guys have also built a brand that's become, part of everyday South African life. You've created, loads of jobs. You're empowering consumers, make it easier to buy and sell cars. So for us, EasyEquities in the community, what we're proud of as shareholders is not just the numbers, but also the culture and the brand that you've built. So numbers, your headline earnings massively up. And maybe you could just start there and tell us what were the key levers behind the performance in the revenue and headline earnings increase.
Yeah, I'll start and I'll hand over to Chris who crunches the numbers. But it has been a good year for WeBuyCars, continued growth. We would have loved to grow more, as any entrepreneur would do. But as you mentioned, it was a bit of a tough period in the market, especially of some of these new vehicle sales entrants from China and Asia coming into the market and also being slightly disruptive. But yeah, we managed to grow volume, grow revenue. Over this period, we're also planning for the long run. We have a very long-term goal for WeBuyCars. We're currently viewing our market share sitting around roughly 10 to 12%. We feel that we can double that. And looking back, we have doubled that over the last 5 years, and we'll continue with the same energy and aggression and competitiveness to gain market share. Market share we gain today is easier than market share we'll have to gain in 5 years' time. So we're well positioned. We have the staff. We have the money to buy the cars, and we now have the facilities in place. We will open 2 new branches still this year that are mega branches, nearly as big as the Dome. So this is rapid expansion, and it'll grow our inventory space by over 20%. This year we've grown it by about 14% with the added branches, but now we're getting really serious regarding that. And yeah, this is all done responsibly. We were able to declare dividends, even a bigger dividend than before, despite these investments we've made. So yeah, with that, I'll hand over to Chris to just get into more detail.
Great, thanks.
Thank you, Faan. Faan, I could add to that. I guess the key drivers of this growth in core headline earnings were higher volumes. So volumes up 7.8%. Sorry, volume up 8.4%. Higher average selling prices. A higher net insurance result. So we've got a guard risk insurance sell captive out of which we sell insurance product. Also driven by lower finance costs and cost efficiencies driven by economies of scale.
Yeah, it's actually fantastic. I want to ask you a little bit about, and you both spoke about it, how do you balance your cash with the reinvestment for growth and giving back to shareholders? I mean, what is more important for you in the next while, Faan? And I ask that because I think you're sometimes a little bit unfairly punished by the market. You've got such great results. You do, and I'm talking as a biased shareholder. I'll declare that up front. But I think you're doing that well in terms of investing for the future. But people obviously want more dividends and cash back to shareholders.
Yeah, look, I think, we're a growth company, so we're never going to declare loads of dividends. We can utilize the money in the business elsewhere. And I think that's what a shareholder that shares our vision would understand. But we, at the same time, you do want some liquidity coming out of your investment. So it is a balance. I think what we've been really good at over the years was acting very responsible when it comes to debt levels within the business.
Yeah.
We value our properties at historic cost. We haven't revaluated any of the properties. That's something we could potentially do in the future, but it will also blur the status quo. So yeah, it's an easy to understand business in terms of you got debt on property, you got debt on stock, and we know what those levels are. And I like sleeping at night, so we keep them low. But I'm sure Chris will elaborate a bit as well.
Yeah, maybe to add,
go for it, Chris.
I add quickly. When we listed, we made it very clear in our pre-listing statement that we believe that for a growth company, a sort of dividend payout ratio of between 25 and 33% was appropriate. And in the last sort of 3-6-month periods since being listed, we've declared 2 dividends at that 25% level, so 25% of headline earnings per share. And in this most recent dividend, we've taken that up slightly, despite the big investments that Faan has spoken to. We've taken that up to 29% of headline earnings. So still remaining within that range of between 25 and 33, as well communicated to the market.
Exactly. So you spoke about Chinese brands, and they've clearly reshaped the market. So maybe, Faan, you can chat a little bit about how the new entrants affect things like your pricing strategy, the stock mix. You also mentioned fast-moving inventory. What do all of those things look like in practice?
Yeah, look, it's a very interesting dynamic. I can keep you busy with days regarding, pricing strategies and market dynamics and movement within the used vehicle space, and as far as vehicle values are concerned. We all know that when you buy a brand new vehicle, you can't expect for it to keep its value. It will depreciate. The question always is by how much. Now, certain brands keep their value better than others. But then there are some external factors that can also play a role. How many kilometers do you cover? What type of roads did you drive with the vehicle? Did you choose a good color when you bought this vehicle? And then there are other factors like market sways. So you do experience period of accelerated appreciation or depreciation in terms of used vehicle values. We've seen that, for instance, in COVID, when no one could get hold of a new car, there wasn't any new cars coming into the country. So the used vehicles sold very well. So there was an inflationary period. And then following that, when new vehicles came in, there was a deflationary period. So with the Chinese cars coming into the market, it really compete in a segment of the used space. That being, let's call it the between 400 and 600,000 rand price bracket, where that's a sweet spot for these Chinese cars, where they really compete well in the market and make a compelling offering, and convince consumers to go for that, with warranties and all the technology you could ever want in a vehicle. Some of the critics might say, look, they are not as fuel efficient as modern German cars. But then again, if you look at our Val that competes with a VW Tiguan, there's a huge price difference. And that's probably why we've seen some of these European manufacturers experiencing strain in their sales. So with us, there was a period earlier this year where we saw that the new vehicle sales really soared, and our own vehicles that we had in price ranges that compete with these new cars were under strain, and we had to recalibrate. Luckily, we can do that. very quickly, and you take a bit of pain on a small portion of your stock, but then you liquidate that and utilize that funds elsewhere where it is profitable. The beauty of WeBuyCars is that, you know, we trade the whole market. So there's 12 million cars in South Africa, with an average age of around 10 years. So, you know, when our average age of a vehicle we buy is just about 9 years. So it's a far safer bet in terms of depreciation. You're not taking chances. They have gone through the rapid descent in terms of depreciation. So the vast majority of our cars are not really affected with new vehicle market trends.
It's fascinating. And I just want to pause there because one of the things we're passionate about EasyEquities is education. We're agnostic in what people invest in, but we want to expose people to investment opportunities. And just listening to you, Faan, and your knowledge and the passion you clearly have for your brand and the industry you operate within, it's indicative of the CEOs that are prepared to come in and talk to, you know, a couple of thousand of their shareholders and 1.2 million clients without having questions beforehand or prepared. And so, yeah, big thanks for that. It's really nice. But on what you've said now, how big a role does AI and technology play in that customer experience and the pricing models and what have you? Because you started off, I mean, just so entrepreneurial, so I'm getting a new face. I'm very excited on the AI question. But yeah, how does AI work on that?
Sorry, Wynand's our Chief Digital Officer, so he'll answer that question based in the room.
Awesome. Thanks, Wynand.
Hi, Carel. Nice to meet you. Yeah, thanks. Great question. So there's a lot of buzzwords in the industry right now, which AI is one of the big ones. I think if we roll back the clock just a bit to 2018, when we started with this digital transformation journey in WeBuyCars, we decided to build our technology, or what we call a digital business platform, from the ground up. And we decided to do it ourselves or internally and build a proprietary platform. And the reason for that decision was based on two principles. The first was we wanted to be in control of the software, firstly. So we wanted to be agile and not adapt the business to the software, but we wanted the software to work for the business. And I think the second thing is we wanted to be in control of the data and the cleanliness of the data and the data pipelines. Now, that's very important because if you get that right, all the buzzwords like machine learning, computer vision, AI, all just becomes easier if you have clean data. It's very difficult to operationalize data in your environment if you struggle with different legacy systems, more than one system. A lot of companies have more than one billing system, more than one inventory or CRM system. And we're very fortunate to have one system, one platform. We have a couple of principles like capture once. We collect data on every touch point with the customer, and we use all this data on every input to build this pricing models with machine learning, quickly recalibrate it, as Faan mentioned, as the Chinese brands coming in, we can recalibrate our pricing models, and just enhance the customer experience and the user experience for the users, and just continue buying and selling online. So data is our main focus. We're a data-driven company, and we use these pricing models to make decisions and quicker and smarter every day, and enable our people to make the best decision and pricing decisions when we buy and optimize our sales channels.
Fantastic. I wonder, Willem, if you want to take this question, but happy if any of you do. This business has grown so massive, and you're using technology and AI, but you still got this entrepreneurial vibe. You still, you know, strong on culture. Maybe you can talk a little bit about the strategy and your views around this. How do you keep that entrepreneurial culture? I mean, I'm putting you on the spot, but it's, you know, it's such a big part of this brand.
Yeah, I think Faan can sort of jump in. He's the real entrepreneur in the room. But I think for us as a executive, we're new as a listed entity where we've been part of a transaction capital for a long time. And it's one of the key things that as a business that we want to make sure that we try and keep red tape away from our people. A guy like Wynand and his team really sort of make sure that we try and ask the right questions, make sure that we don't solve for things that sort of can happen in silos. And the main thing, we've got a slogan at the back of our main boardrooms that look after the goose that lays the golden eggs. And for us, that is being the best at buying vehicles, pricing them, understanding how they sell through in the market, our machine learning algorithms adjust to that per make and model. So for us, it's really to keep the most important things the most important. And I think that sort of entrepreneurial spirit sort of will follow through from there. And it's us in the room, it's our responsibility to make sure that bureaucracy and red tape and the complications of being a listed entity doesn't sort of filter through to our team, and that they are guarded from that, and that I guess problem solving and innovation sort of remains at the core of our executive team.
Thanks.
Yeah,
Faan, add to that. Yeah.
I'll add to that. I think it's a very fortunate situation or journey that we've been able to surround ourselves, and it might sound cliche, but with the right people. Now, WeBuyCars would not exist if I didn't get a kick out of what I did way back when I bought and sold the first cars. It's important to enjoy what you do. And I believe that the vast majority of WeBuyCars staff enjoy what they do. They are inherently happy people, and we love appointing people who are happy. You don't want to try and make them happy. They are already happy with what they do. So, for instance, Wynand, he loves creating new things in the IT world. It gives him a kick. Chris loves, looking after and crunching the numbers and coming up with new ideas there. And so everyone, if you just look at our marketing campaigns, you can certainly notice that, the team in marketing enjoys what they are doing. So yeah, we're a fun team. We take business seriously, but mostly we enjoy what we do. We're making a difference.
Yeah, absolutely. And it's a saying we live by as well. We take what we do seriously, but not ourselves. So we also pride ourselves on knowing the business, but you've got to enjoy what you do. So you spoke about the two big superstores that are opening. I've sold a car in your Dome store, which was a great experience. And I love being able to engage in your pop-up stores as well. And how do you choose which areas you guys go into? I mean, I suppose it's a stupid question because we've said it's based on data and you make decisions on data. But if I want a little pop-up store or a store in my area, who do I talk to? What's next?
Yeah, so it's always interesting. People ask us, did you do market research? Which of these top companies that you use with market research to tell you where to open pods? Now, I don't know if this answer will hurt you or not, but we haven't done research like that. We feel that a lot of big companies have already done the research. So when we had to craft a pod rollout plan, we thought, okay, so where do we go? Which towns are on the list and which aren't? And it was very simple. We learned that in South Africa there are roughly around 200 Toyota dealerships. So they've already done the work. You just go where they are. And with big branches, we said, okay, well, let's look at where all the macro superstores are. And you sort of follow them in the same vicinities. And that's worked well for us. So there are still a few macros in towns where we don't have WeBuyCars yet, but watch this space.
Carel, if I can maybe just add to that. So the pod, I guess, is one answer, and the supermarket is a different answer, because we often, who we buy from and who we sell to are not necessarily the same sort of population, and it's not quite reflective of the same LSM. So when we buy and going into sort of those tentacles of society, it might be different to where we sell. And a good example is we look at, there's a few sort of data sets that we overlay. The one is the amount of used vehicle registrations in a specific area. The other one is the amount of engagement on our website. So we sort of know that there's people who are electronically inclined. And then what we also do with our banking partners, in particular with Capitec, they inform us which areas they see a lot of loan activity. So we had sort of I guess a priority list of 4 or 5 areas that we wanted to open supermarkets in over the last 2 or 3 years, and that is our rollout. It is Pretoria North, the southern suburbs of Cape Town, Vereniging, and then Bloemfontein and Rustenburg were on that list as well. And it was quite interesting. The Capitec data also helped us to reprioritize, and they mentioned a place like Witbank and Rustenburg as well because of the amount of loan activity. And I guess to take a little bit of a Jim Collins quote is like we're in the fortunate position that you can shoot bullets and then cannonballs later, where the easiest way to do that is to put buyers in a specific area, but buyers being the guy who comes out to your home or place of work. And if we can see that adoption is high, it confirms the sort of, I guess, understanding of the brand and ability and willingness to engage with us. So that confirms like 4 or 5 steps before we make we open a new supermarket.
Great, thanks very much. So I'm going to conclude with you, Faan, because I know you guys got lots more presentations to do. And just for the EasyEquities community, the WeBuyCars team have done a great job making all the information available on their website. So you can check out the presentation on the website. It's very detailed information around the financials, answers a lot of questions. So please go check that research. And the EasyEquities Academy has got a great course on better understanding financials if you want some help. And Faan, I want to conclude because you know, a lot of the numbers and those normal questions people would have heard and can read. I'll ask you a couple of personal things and put you on the spot. And I'm going to start by picking on Jackie, who works in your team. She's a PA to some of the people, and just the experience and engagement with her proves what you said earlier. She's, you know, completely on the ball, and that is the experience from, you know, that person to buyers to you coming on board here. What do you look at first and foremost when you employ somebody? I mean, you spoke that somebody's got to enjoy what they do, but if you hire somebody, what do you look at? What's the one thing?
We look at energy. You know, you want someone who has this glass full attitude. You know, yeah. So some of the questions I quite often ask people, and I used to do a lot more interviews than nowadays, was just tell me about your friends, tell me about your family, because you can learn so much. When someone starts telling you about their background and what they learned from their folks, you know, it's important to have a really solid footing in terms of values, what you perceive as important and not important in your life, and what you aspire to. Just a little joke that I think the listeners will enjoy. Way back, I was sitting in an interview in Cape Town, and some of my team members were conducting the questions. I was just sitting there. But, you know, if you have an interview with someone from minute 2, you know whether it's going to work or not. But now you have to go through this half-an-hour process of the interview. And I was just looking at my computer screen. I told the guy, I can see here you had an altercation with the law. Tell me more about it.